I'm about to expose the biggest scam in real estate, and this is coming from a real estate agent, so trust me. The 0% down programs, right? The down payment assistance programs, in my humble opinion, they're all a freaking trap.
This stupid house process, I wish I never did it. It was the biggest regret of my life.
Imagine this. You're scrolling through Zillow or walking through a shiny model home when a real estate agent leans in and says, "You don't need a down payment. We can get you approved today. 0 down." Suddenly, the impossible feels possible. No need to wait, no need to save for years. You're about to become a homeowner today. But here's what they're not telling you. That 0 down offer could be the fastest way to ruin your finances for the next 10 to 15 years. Because in the world of real estate, 0 down doesn't mean 0 risk. It means maximum exposure, and you're the one taking all the hits. On the surface, 0 down looks like a blessing. The average home price in the US is now over $400,000. A 20% down payment, that's $80,000, more than most Americans have in their savings account. According to a 2023 Federal Reserve report, 37% of Americans couldn't even cover a $400 emergency without borrowing. So when someone offers you a home, no savings required, you jump at the chance. But that's where the trap begins. What they don't explain is, you're now financing 100% of the property with no equity buffer. You'll likely pay a higher interest rate than someone who put money down. You're also stuck paying private mortgage insurance, PMI, a monthly fee to protect their money, not yours. So even though you paid nothing upfront, your monthly payment is bloated and your risk is maxed out.
Thank you all. Please be seated with us. I am here today because we are taking action to bring many thousands of Americans closer to owning a home.
Lenders approved people for loans with 0 down, no income verification, adjustable rate mortgages. The result? A short-term explosion in home ownership, followed by a historic crash. Between 2006 and 2014, over 10 million Americans lost their homes. And the common thread among most foreclosures? Little or no down payment. These weren't irresponsible people. They were just told, you deserve to own a home. But what they really got was a ticking time bomb, disguised as the American dream. Lenders don't just use numbers, they use psychology. Here's how. 1. Scarcity trap. This offer won't last. Urgency kills research. Agents make you feel there's a line behind you. 2. Commitment bias. Once you picture your furniture, your kid's room, you're sold. Backing out feels like losing something you never owned. 3. Sunk cost fallacy. You keep paying because I've come this far, throwing money at a bad decision instead of walking away. 4. Framing manipulation. It's just $200 a month. They hide. Property taxes, insurance, HOA fees, repairs. These add 25-35% more. 0 down buyers underestimate this every time. Buying a home with 0 down is like driving a brand new car without a seatbelt. Looks great, feels exciting. Hit one bump and you're through the windshield. In real estate, speed without safety is deadly. Borrowers with 5% down are 5x more likely to default than those with 20%. 30% plus of first-time buyers, 2020-2023, put 3% down or less. Just a 5-10% price drop puts these buyers underwater, owing more than the home is worth. Now imagine you lose your job or get hit with medical bills. You can't sell, you owe too much. You can't refinance, no equity, you can't move, and worst of all, you can't afford to stay. Meet Jasmine, 29, single mom, Atlanta. 0 down FHA loan on a $350,000 townhouse. Developer paid her closing costs 6 months later. HVAC failed, $7,500 repair. Property taxes jumped 22% mortgage adjusted, plus $300 a month. She defaulted within a year. Credit dropped 120 plus points. Back to renting, with $15,000 debt chasing her. And Jasmine isn't alone. Experian, 28% of 0 down borrowers fall behind within 2 years. Most are under 35, Black or Latino lower income first-gen buyers. Why? They're being targeted. They trust help from institutions. But that help is a hook. 0 down loans aren't about helping you buy a home. They're about helping lenders sell more loans. Loan officers, paid on volume, flip loans to big banks or government programs. Face no consequences if you default. Developers. Many partner with in-house lenders, pushing risky loans to move inventory fast. It's vertical integration, perfectly legal. But is it ethical? When 0 down can work, but rarely does it's possible in a few cases. VA loans, military, USDA loans, rural housing, down payment grants, no emergency fund, stable income. Full understanding of the risks without that. 0 down equals 0 cushion. What you can do? Instead, Save something, even 5 to 10%. You don't need 20%, but equity matters. Calculate the full cost, not just mortgage. Include taxes, PMI, insurance, repairs, lifestyle inflation. Ask yourself, if the market dropped 10%, could I stay here 5 years? If no, you're not ready. Renting is not failure. Buying isn't always winning. Overpaying for a home you can't afford, that's financial regression, not progress.